Hello and welcome to today's daily educational video here at Forex.Academy. I am, of course, your host, Robert Blackwell, and have the pleasure to walk you through today's daily education. So let's move on and consult the following disclaimer. Of course, there is risk involved trading the financial markets. On today's particular webinar content, we will be discussing trading asset classes and going through the JFX trading platform to actually trade some of these different asset classes with you. So what I'd like to do is just consult then the JFX trading platform we have, of course. So most of you are more familiar, of course, with Forex pairs, and that's absolutely fine. There is a lot of opportunity trading Forex pairs. There is a plethora of different majors, minors, and exotics that you can trade. But what I want to include, guys, and to get you to think about mitigating more risk in terms of your long-term potential for profit is to actively trade more asset classes. Now, this could be in the wealth or the midst of potentially trading more Forex pairs, of course, potentially trading commodities, trading equity indices, and more cryptocurrencies, of course. So what you could do, of course, is look to build a structured portfolio of trades that are completely uncorrelated. That way you're mitigating risk. They're not related in any way, but you're able to actively trade a little more. So let's go through a few markets here and pick a few trades, and we'll develop some of the skills needed, I would say, to develop your own asset class portfolio. So what I'll do is just open my terminal here. I don't have any current trades on at the moment, and I'm going to place some trades just to effectively show you how you can get involved in more asset classes, effectively trading a different portfolio of instruments over time. Okay, so I'm just moving in my screen a little so you can see my terminal here. First, we have the Nasdaq 100. Okay, so we'll see what we're doing today. It's of course a very strong day, of course, with the equity markets moving to new highs. What I would like to do is potentially look to buy that market again. If I zoom in on the hourly price action, it's trending to the upside strongly. Again, we're on Thursday here, so potentially this could trade towards the end of the week. What I'll do is simply look to buy this market again. So what I'd like to do is go to my new order, the Nasdaq 100. I'm going to go this time I'll stick with a 0.01, and I'm going to go market execution. So simply looking to buy that market there. Again, what you can do then is to consult your stop loss. If you want to click and drag the stop loss to lower lows, I'll choose the low of today, of course, and I'm hoping for potential upside for this market to move up to new highs. So it could be in and around this level. Again, just to new highs. That's absolutely fine. Following the momentum, again, it's a great winner if that's the case. But I'm going to take profit and try and let this market run to the upside, see where it takes me. Then what I can do is go on to the Euro US dollar, and again, actually consult to see how it's trading. Again, I've just put in some support and resistance level here, so we can see we've actually broke this trend to the downside. It looks to be trading quite strong to the downside. Again, with today's price action, it actually looks like it's just pulling back a little, but I'm still very much bearish this trade, so I potentially want to trade this to the downside. What I'm going to do is I'd like to trade perhaps 5,000 euros against the dollar in my portfolio here. What I'm looking to do is actually sell this market. So what I'll do then is go to my volume. I'll go to 0.05. That is, of course, a nominal trade value of 5,000 euros. And I'm actually going to sell this again. Okay, so we're now in two trades that are effectively completely correlated. I'm going to move my stop loss, or input a stop loss, of course, to the last corrective high, which would be this market here, again, trying to follow the larger picture trade to the downside. Okay, so that would be a totally uncorrelated trade. And again, we are in a Forex pair. Then what I'd like to do perhaps is to go on to a new asset class. Effectively, we have the cable market. I don't fancy a trade in that at the moment. Dollar yen, that could be a potential trade, but I'm looking to digress or stretch my portfolio across different asset classes. Now, the first market I see here is copper. Again, completely uncorrelated. Let's see how it's trading. It's strong to the upside. It seems to reject these lows. What I'll actually like to do is to buy this market. Again, looking for a very strong trade to the upside. So I'm looking to follow this momentum. I'll place a new order. I'm just choosing to buy 0.01 of COMEX copper futures. And again, I'll place my buy marker. There we can see we've just entered the trade in terms of the large pip exposure to this trade. So effectively looking to follow this momentum to the upside again. And again, I'll place my stop loss just at relative last lows. So effectively, I'll choose the low of today again. That's fine. I'm looking for this market to trade all the way up to new highs. So it seems supportive today, and of course, I can look to capture in some profit potentially if it simply looks to trade up anywhere around these relative highs here. That gives us a good risk reward ratio. That could be decent trade in terms of following this momentum. Then we have, so already we have one equity index, we have one forex pair, we have copper as well, one commodity. What I would like to do then in terms of diversifying completely my portfolio is scroll across different asset classes. What would I like to trade? Well, I will trade, of course, an oil market again, and I'll actually look to choose a US WTI oil. So I'll make this trade here, or make this a chart of interest. Of course, it's a very bullish move to the upside. Looks to pull back today with today's price action. So what I would like to do is buy this market. Again, what I'm choosing to do is go to new order. I'm looking to perhaps purchase 0.3 in this market. Okay, I'm looking to buy that market there. And again, I'm going to move my stop loss below the last corrective low, I would say, just of this candle here. I'll zoom in and outline that candle just to give me a bit of room on this trade to move amongst the volatility. I'm just going to highlight the candle itself. This particular corrective low with this candle is my stop loss again. And what I'm looking for is potential move up to potentially $74, $75, given we've recently broken the $70 mark. So as you can see, now obviously I've chosen to add a little size here in terms of the overall exposure, but again I have a value of 6,000. As if you can just consult the balance here on the demo account, $6,372.44. So that's maybe why I chose to place some active trades there with some large trade size. So it did cost me a little. That's absolutely fine in terms of the pip spread. However, you can see now these are long-term positions. What I'm looking for is, of course, this market to trade, or this portfolio of markets to trade and benefit me over the long run. So I'm taking long-term positions in the markets here. I have, of course, very, very uncorrelated assets across different asset classes here. What I like to do is just highlight this again with a little detail here. You can just use a slightly larger analytical pen for this. So right here we have our symbols, of course, for the Nasdaq 100, a US equity index. I'm in the euro US dollar, I'm in the copper market, and I'm in the US oil market. So I've effectively created a portfolio of 4 different markets to see how this market, again, I'm looking to follow momentum in each single market. So I would assume, ceteris paribus, if I'm trading tomorrow, I'll move forward. These markets should continue the trend. And again, I've allowed myself to capture some probable moves in the markets again. Now, there has been very little technical analysis in this, of course, and fundamental discussion. It's really just to show you how to select totally different uncorrelated assets that you may look to trade. Of course, I would recommend, if you have a smaller trading account, trading smaller size perhaps. However, you can see now we're effectively trading 4 different asset classes which are completely uncorrelated, and now I'm trying to follow momentum with a diversified portfolio. So that finishes off our daily education for today. Thank you very much for joining us. We'll see you next time. Bye for now.